This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Monday, hovering near their lowest levels in months in volatile trading as positive economic data from China and the United States fed hopes for demand despite nagging fears of a recession. Brent crude futures were up 93 cents, or 0.9%, at $95.85 a barrel by 11:20 a.m. Eastern Time, 15:20 GMT. U.S. West Texas Intermediate crude was at $89.68 a barrel, up 67 cents, or 0.8%. Last week, fears that a recession could dent energy demand pushed front-month Brent prices down 13.7% to their lowest since February. It was Brent's biggest weekly drop since April 2020, and WTI lost 9.7%.
Both the US and European economies are slowing in response to surging inflation, supply chain disruptions, Russia's invasion of Ukraine and the sanctions imposed on response. But while the US economy still displays momentum, the major European economies are on the cusp of a recession, and the slowdown is likely to intensify as winter approaches and energy prices rise further. Germany, France, Italy and Britain are all likely to be in recession before the end of the year, cutting their consumption of diesel in manufacturing, freight and construction.
Moving on to the top news in the energy sector.
Spot prices for Russia's key export crude-grade ESPO blend to Asia have rebounded from all-time lows amid strong demand from top buyers India and China and easing concerns about possible sanctions, several traders said. The crude exported from the Pacific port of Kosmino saw its spot differentials dive from premiums to a record discount of more than $20 a barrel in March as Western sanctions were slapped on Russian financial and energy companies following the country's invasion to Ukraine. However, the European Union tweaked sanctions on Russia that came into force last month, easing payment restrictions for oil shipments from state-owned firms Rosneft and Gazpromneft, major suppliers of ESPO crude.
U.S. fuel retailers are fighting the inclusion of a tax credit for sustainable aviation fuel, SAF, in Democrats' $430 billion spending bill, arguing SAF is more carbon-intense and less efficient than renewable diesel. Lawmakers are offering a $1.25 to $1.75 per gallon SAF credit depending on the feedstock used, as part of a tax and climate bill that aims to lower U.S. carbon emissions by about 40% by 2030 and cut the federal budget deficit by $300 billion. The bill is expected to pass the Senate and move to the House with the SAF credit included next week. Democrats control the House and approval with the credit as expected. Next, we have the top news in metal markets. China's imports of copper rose 9.3% from a year earlier, customs data on Sunday showed, as a sharp drop in the price of the metal triggered buying appetite amid falling domestic inventories. Unwrought copper and copper product imports into China, including anode, refined, alloy and semi-finished copper products, totaled 463,693.8 tons in July, compared with 424,280.3 tons a year earlier. July's copper imports, however, were down 13.8% from the previous month's 537,698 tons.
Gold prices rose on Monday following a pullback in the dollar and U.S. Treasury yields, while investor focus shifted to U.S. inflation data for clues on the Federal Reserve's rate hike plan. Spot gold rose 0.8% to $1,787.69 per ounce by 12:33 p.m. Eastern Time, 16:33 GMT, while U.S. gold futures rose 0.7% to $1,804.20. The dollar index fell 0.3%, making gold more appealing to other currency holders. U.S. Treasury yields also slipped.
We will now look at the top news in the agricultural sector.
India could scrap a 40% duty on wheat imports and cap the amount of stocks traders can hold to try to dampen record-high domestic prices in the world's second biggest producer, government and trade officials told Reuters on Monday. Late in the day, the Trade Ministry said it would restrict the export of some wheat-derived products like finely milled, maida, and semolina from August 14, with only an interministerial committee allowed to clear their shipment. Exports of the items are generally small. India barred wheat exports in May after the crop suffered a heatwave, but domestic prices still rose to a record high. Yet, international prices are still way above the domestic market, making it unviable for traders to buy from abroad. That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.